Okay, let's do this question now. On 1st February 2020, XYZ Limited, a laptop manufacturer, imported a particular type of memory chip from SK Semiconductor of South Korea. Payment is due in 1 month from the date of invoice, amounting to 1190 million SKW. The payment is 1190 million. Following exchange rates are quoted in two different markets: USD slash INR, USD slash SKW. Tell me, is it INR per USD or USD per INR? INR per USD. So the second one will be SKW per USD. Since hedging was part of company's strategic policy and no contract for hedging in SKW was available, I wanted to hedge this, but bank is not ready to give me any contract for SKW. It approached an offshore non-deliverable forward market. What is non-deliverable forward market is, normally in a forward contract, I will pay the money, get the dollars. Here on the last day, in a non-deliverable forward contract, net settlement will happen. Net settlement will happen. What is net settlement is, you will calculate the profit or loss, and the profit or loss will come to you, and you have to pay as per the spot rate. It is like a futures contract rather than a forward contract. Whatever we were doing for futures, we have to do a non-deliverable forward contract. Reason is, in India I could not find a contract for SKW, so I went to an offshore market. I went to another market and got it. In NDF market, dealer gave USD slash SKW. In fact, I wanted USD INR, that is INR and SKW, but I got USD SKW, whatever it is, at for 10 lakh to be settled at a reference rate. After 1 month, the dealer agreed for 1185 as a rate for settlement. All this data is given. Analyze the position of the company, comparing with spot position. Comparing with spot position, if you do nothing and if you opt for NDF contract. What is comparison is technically called as transaction exposure risk. What is transaction exposure risk? I will calculate, if I make payment today, it will be 10 lakh. If I make payment later, it could be 10 lakh 50,000. That gap is called as the risk, or the gap is called as the expected profit or loss if I don't do hedging. And second option is opting for NDF contract. One more thing very clearly mentioned is, both rupee per SKW rate and the final payment should be rounded off to 4 decimal point. So when I do my calculation, I will be doing the calculation for doing nothing. At that time, I will round off the rate to 4 decimal point. Round off the rate to 4 decimal point, and then I do the multiplication. Round off the final number to 4 decimal point in lakhs. In lakhs. Two requirements they have given, very clearly given. Good. They said round off to 4 decimal point. First, let's get into no hedge scenario. Under no hedge scenario, what will happen is, they are saying comparing with the spot, analyze the position under each of the following situation, comparing with the spot position of first Feb. So I have purchased it on first Feb, assuming I made payment at this rate, what will be my outflow, and payment at this rate, what will be my outflow. The gap is called as the profit or loss under no hedge scenario. Comparison is profit or loss under no hedge scenario. Working note 1, no hedge scenario. No hedge scenario. Outflow, note 1, outflow if payment is done today. Outflow if payment is done today. If payment is done today. If payment is done today. Exposure amount. Exposure amount. INR will finally convert into lakhs, okay? Exposure amount. What is the exposure amount given in the question? We have purchased goods worth SKW 1190 million. 1190 million. outflow in INR. Outflow in INR. Known component 11,900 lakhs SKW. I'm doing it in lakhs now. Okay, 11,900 lakhs SKW. Are we going to buy SKW, sell SKW? Participate, guys. Buy unknown currency question mark INR. Unknown currency question mark INR. INR is equal to SKW. Not audible. Sorry guys, I was on mute. Okay. Known currencies 11,900 SKW by unknown currencies question mark INR. Unknown currencies question mark INR. In this question, first we are analyzing if outflow happens today, what will be the outflow for us? Exposure amount is SKW 1190. SKW 1190 million. Known currency 11,900 lakh SKW by unknown currency question mark INR. Question mark INR into INR per SKW. What is the denominator currency? SKW. What are we doing with SKW? Buying. What is the bank going to do? The bank will sell it. Ask rate. When we do the calculation, we will first get a 4 decimal ask rate, okay, and then only we'll do the final multiplication. 11,900 lakh into what is the connecting currency? INR per USD into USD per SKW. INR per USD into USD per SKW. Give me the ask INR per USD. 70 and 1 by bid rate. 1 by bid rate 75.5. Any doubts on 75.5? What happened? Is there a doubt? Okay, and I need USD per SKW. What I have is SKW per USD 1 by bid. 1 divided by 1190. Technically, if I do direct multiplication, I will not have any rounding of impact in this numbers. But they have said take a 4 decimal rate first and then do the multiplication. So 75.5 divided by 1190, get a 4 decimal rate first. Next INR 75.5 divided by 1190. 0.0634. When you multiply, this answer should be a 4 decimal answer in lakhs. 4 decimal, I don't think so decimal will come here. 0634 into 11,900. INR 754.46. This is a specific request of the question that you have to do a 4 decimal rate. 0.0634. In fact, if I had not done this, I would have done a direct multiplication. Rounding off would not have happened. 11,900 into 75.5 divided by 1190. We would have got 755. But the question specific request is do 4 decimal. Do 4 decimal INR 754.46. But I am not going to make the payment now. I'm going to make the payment a year, that is a month later. When I make the payment a month later, my outflow can go up, outflow can go down, and the gap is what I have to do. Comparison is what I have to do. Next, note 2, outflow when actual amount is paid a month later. Actual amount is paid a month later. Actual amount is paid a month later. Everything is same. You do the calculation and write the answer. 4 decimal rate. Take the 1 month forward rates now. Outflow when actual amount is paid a month later. technically don't see any use of this, but a question has said do 4 decimal rate. That's why I'm doing 4 decimal rate. Otherwise, I would have done a direct multiplication. How much? So I am going to make an extra payment as compared to original plan. Original, that is, if I had gone through today payment, I would have made a payment of some 754, and later under forward contract, or sorry, under no hedge scenario, I have to make 759.22. Comparison is comparing these two amounts, and I'll say there is a profit or loss which is going to happen. Profit or loss which is going to happen. Clear? Any doubts on this? Can you proceed? Loss under no hedge scenario. Comparison, why loss? Because we are paying more. 759.22 minus 754.46. 4.76 lakh. Now I have to do a similar comparison for NDF also. NDF outflow, if payment is done today, same 754.46. If you pay today, it is 754.46. If you pay a month later, 759.22 still holds good, plus or minus futures profit or loss, plus or minus futures profit or loss, plus or minus futures profit or loss. NDF is nothing but futures. Under futures, settlement will happen only at the spot rate. So first note number remains same, second note number also holds good, but along with this there is going to be a futures profit or loss, or NDF profit or loss. I have to do a non-deliverable forward contract profit or loss calculation. Clear? Only challenge here is, because there is a bid and an ask rate, I will use the forward contract format. What is the forward contract format? Entry date, position, action, and then we write the rate. We'll write bid and ask, all that in the format, get the profit or loss. Once we get the profit or loss, we'll convert that into INR and add that number to 759, whatever you have calculated. This number can go up or can go down. Clear? Any doubts on this? NDF is nothing but futures. NDF is nothing but futures. Sorry. NDF is nothing but futures. Under futures, what is going to happen is, you are going to do a spot. You are going to do a spot settlement. There is going to be a spot settlement. Spot settlement is going to be 759.22. Along with that, added item is futures profit or loss. Along with this added item is futures profit or loss. Clear? Any doubts in this? All right. NDF. NDF scenario. NDF scenario. Outflow if payment happens today. Outflow if payment happens today. ENR 754.46 lakhs. 754.46 lakhs. Outflow if payment is done a month later, 759.22 lakhs plus or minus NDF profit or loss. We'll do the calculation. Plus or minus NDF profit or loss. It can be a profit, it can be a loss. I will do that calculation. Plus or minus NDF profit or loss. Leave some 2-3 lines and then come down NDF profit or loss. NDF profit or loss. Entry date, position, execution date, sorry, action, execution date, and rate. Ideally, I should have gone for an INR versus SKW, but I have gone for USD versus SKW. They have clearly given what we have done. In NDF market, dealer said the rate is 1190, 1190.50. Now, did I enter at 1190 or 1190.50? Depends on whether I'm taking a bid rate or the ask rate, or whether I'm buying it or selling it. For notional amount of how much? USD 10 lakh. You have entered it for USD 10 lakh. There was nothing like USD 10 lakh, but you entered for USD 10 lakh. You went ahead and did USD 10 lakh. So the two currencies we have for NDF is USD and SKW. This I want to buy. So technically this I want to sell. This I want to sell. I want to buy SKW. So I'm going to sell US dollar. I want to buy SKW. Ideally we should have INR here, but INR you did not enter. Whatever the question has said, we'll follow that. Below the table, leave some another 4 lines, 4 to 5 lines for table. The company has entered into contract on notional amount of USD 10 lakh. USD 10 lakh. Notional amount of USD 10 lakh. We are planning to buy SKW. We are planning to buy SKW. Hence, we will sell USD. We will sell USD. We will sell USD. Clear? Entry date Feb 1. Original contract. I'm going to sell the product currency. Sell bid rate. Sell bid rate. Sell bid rate. Sell bid rate. The execution date was Feb 1. Sorry, not Feb 1. No. March 1. Sorry, March 1. Execution date is March 1. They have entered into a contract at the bid rate. At the bid rate, the dealer gave me 1190, 1190.50. The dealer gave me 1190 and 1190.50. I entered at 1190. I entered at 1190. What is that 1190? SKW per USD. SKW per USD. Rate is SKW 1190 per USD. We are selling the product currency, hence we entered into a sell contract. Amount of contract, all that is not needed. He has told 10 lakh you have done. 1190 per USD. I come back on March 1. Opposite contract to get the net settlement. Buy in bracket ask March 1. Buy ask March 1. Now they are saying after 1 month the dealer has agreed for 1185. 1185 as rate for settlement. 1185 as the rate for settlement. The dealer has agreed for what? 1185 as the rate for settlement. They have given 1185. I follow 1185. Else I would have used here. I would have used this rate. They are saying 1185 has been used for settlement purpose. SKW 1185 per USD. This is in bracket. This is in bracket. SKW 1185 per USD in brackets. We make a profit here. Profit is how much? Overall profit. On 10 lakh, we are doing profit. 50 lakh SKW. 50 lakh SKW. 10 lakh is the contract we entered. 5 SKW per dollar is our profit. 50 lakh SKW. Doesn't end here. 50 lakh SKW. Now the dealer will give me this money in not SKW. He is going to use that 1185 rate and give me dollars. He will use the rate of 1185 and give me dollars. Can he give me SKW itself? Depends on the term. ICI has said he will give you at the settlement rate, in dollars, So then final answer, overall profit in USD, 50 lakh divided by 1185 settlement rate. I'll get a very insignificant amount, USD 4219. I will get US dollar 4219. This I will now convert into my currency INR. I'll convert into my currency INR. I'll get US dollar 4219. Why 4219? Settlement rate was 1185. I got this. Next line or below, come down. NDF profit in INR. NDF profit in INR. We made a profit of $4219. $4219. Technically 0.04219. Okay. If I do it in lakhs, $4219. Below this, known currency USD 4219. I will sell this. USD 4219. I'll sell this. Unknown currency question mark INR. I have a profit. I'll sell the profit and convert into INR. I'll sell the profit and convert into INR. USD 4219. Will convert this into INR. Profit of 4219. So INR is equal to INR answer. I'll write it in lakhs 4 decimal. Okay, INR is equal to USD into INR per USD. Denominator currency is USD. What are we doing with USD? Sell. Bank is going to buy. Bank will buy it. Bid rate 4219 into, on the last day the bid rate is 75.5 multi 75.5 only, no, multiply and write it in lakhs 4 decimal 3.1853 lakhs 3.1853 lakhs. NDF will give me a profit of around 3 lakh rupees extra. 3.1853 lakhs. NDF is nothing but a futures contract. It's nothing but a futures contract, like a futures contract. Futures, always payment will happen at the spot rate and there will be a net settlement. Here also there's a net settlement of 50,000 SKW. He could have given me 50,000 SKW. That depends on terms. ICI said no, it will come in dollars. If he had given me 50 lakh SKW, I would have got the 50 lakh SKW and done calculation on that. But I got 1185. I divide by 1185, got dollars. And now I get this dollar. I come back here. Right. Outflow if payment. Right here. Outflow if payment is done a month later is equal to 759.22 minus. Why minus is because this is outflow. 759 is outflow. This is inflow. 3.1853 lakhs. 3.1853 lakhs equal to Our outflow will go down. 756.03. Still there is a loss under NDF scenario also, because today it's only 754 and later it is 756. Still there is a loss only, but okay, this is better. 756.0347. 756.0347. Any doubts on this? Right below this, loss under NDF scenario, 754 original payment, and I'm forced to pay more now, 756.0347 lakh. I'm forced to pay more now. Forced to pay more now. Gap 1.5747 lakhs loss. Loss is not going to be eliminated. Loss will continue to be there, but it is better than the no hedge scenario. This is as per the rates given in the question. What is NDF is? It's futures. NDF is nothing but as same as futures. In futures, there will always be a spot settlement plus or minus futures profit or loss. On top of this, some margin money, all that adjustment can come. That's not there in the question. Any doubts here? Clear?